Investing can feel intimidating, especially for beginners, but with exchange-traded funds, you can diversify your portfolio and potentially see good returns without picking individual stocks. ETFs are a powerful tool for investors. They offer a basket of stocks, bonds, or commodities, all rolled into a single security. The good news is there are excellent ETF options available for under $100. Through careful research, I've compiled a list of the top 8 ETFs currently trading at this accessible price point. Let's dive in and explore how you can leverage these affordable options to build a well-rounded investment portfolio. Number 1. Ishares Core Dividend Growth ETF. The Ishares Core Dividend Growth ETF, known by its ticker symbol DGRO, is currently priced at $57.68 per share as of July 3, 2024. It's an exchange-traded fund designed to provide investors with exposure to a diversified portfolio of U.S. companies that have a history of consistently growing their dividends. Managed by BlackRock, DGRO is part of the iShares suite of ETFs known for their low cost and broad market exposure. DGRO targets companies that are not only paying dividends, but also have a strong track record of increasing their dividend payouts over time. This focus on dividend growth can appeal to investors seeking both income and potential capital appreciation. One of the attractive features of DGRO is its low expense ratio. As of the latest update, the expense ratio is 0.08%, making it a cost-effective option for investors who want to minimize fees while gaining dividend growth exposure. This ETF offers a dividend yield of approximately 2.35%. and includes a diverse portfolio of 419 companies. Among its top holdings are prominent technology giants like Apple, Microsoft, and Broadcom, as well as major sustainable companies such as Chevron, Johnson & Johnson, and Procter & Gamble. DGRO has demonstrated a strong performance over the years. On average, the ETF has appreciated by approximately 12.29% annually over the last 5 years. This combination of solid dividend returns and robust price appreciation makes DGRO an attractive option for investors seeking both income and growth potential. Number 2. Vanguard Russell 1000 Growth ETF. The Vanguard Russell 1000 Growth ETF with the symbol VONG is currently priced at $96.23 per share as of July 3, 2024, and has a very low expense ratio of just 0.08%. This means that for every $1,000 you invest, only 80 cents goes towards fees annually, making it a cost-effective option for investors. Over the past 5 years, the ETF has shown impressive performance, with an appreciation of approximately 136.26%. This consistent growth reflects the strong performance of its underlying holdings and the overall market. So far in 2024, the ETF has increased by approximately 27.6%, showcasing a remarkable year-to-date performance. This significant increase is indicative of the robust market conditions and the strong returns of the companies included in the fund. The top holdings of the Vanguard Russell 1000 Growth ETF feature some of the biggest and most influential names in the tech and consumer sectors. These include Microsoft, Apple, Nvidia, Amazon, Meta, formerly Facebook, and Tesla. These companies are well known for their innovation, market leadership, and substantial contributions to the growth of the tech industry and the overall market. The Vanguard Russell 1000 Growth ETF offers investors exposure to a diversified portfolio of high-growth companies. Its low expense ratio, strong historical performance, and impressive year-to-date returns make it an attractive option. Number 3. Invesco PHLX Semiconductor ETF. The Invesco PHLX Semiconductor ETF, also known by its ticker symbol SOXQ, is currently priced at $44.35 per share as of July 3, 2024. Over the past 5 years, the ETF has shown impressive performance, with an appreciation of approximately 76.94%. The fund has a low management fee of 0.19%, making it cost-effective for investors. The top holdings in the SOXQ ETF are prominent semiconductor companies, including Nvidia, Broadcom, Advanced Micro Devices or AMD, Micron Technology, Qualcomm, and Taiwan Semiconductor Manufacturing Company, TSMC. These companies are leaders in the semiconductor industry, contributing significantly to the ETF's performance. Investing in the SOXQ ETF allows investors to gain exposure in the semiconductor sector, which is crucial for numerous technological advancements in industries. The impressive historical appreciation rate of the index it tracks indicates potential for continued growth, driven by the increasing demand for semiconductors in various applications, from consumer electronics to artificial intelligence and automotive technologies. The fee structure of 0.19% is relatively low, ensuring that more of the investors' money is working towards growth rather than being eroded by management costs. This makes the SOXQ ETF an attractive option for those looking to invest in the semiconductor industry without incurring high fees. If you're enjoying this video, hit that like button, subscribe, and turn on notifications for more valuable content. Number 4. SPDR Portfolio SP 500. The SPDR S&P 500 ETF, also known by its ticker symbol SPLG, is currently priced at $64.81 per share as of July 3, 2024. The SPLG ETF, similar to VOO and SPY, tracks the S&P 500 index, meaning it mirrors the performance of the 500 largest publicly traded companies in the US stock market. SPLG offers a more affordable entry point compared to some of the other S&P 500 ETFs. This year, the ETF has performed well, increasing by approximately 17.41%. One appealing aspect of SPLG is its relatively low expense ratio of 0.2%. This means that for every $1,000 invested, the annual fee is just $2, making it a cost-effective option for investors. The ETF includes major companies such as Microsoft, Apple, Nvidia, Google, and Berkshire Hathaway. These top companies are significant contributors to the index's performance, representing key sectors like technology and finance. Investing in SPLG allows you to gain exposure to these industry leaders, benefiting from their growth and stability. Number 5. Avantis US Small Cap Value ETF. The Avantis US Small Cap Value ETF, also known by its ticker symbol AVUV, is currently priced at $89.57 per share as of July 3, 2024. This ETF is designed to focus on small cap companies within the US that are considered to have strong value potential. It offers an expense ratio of 0.25%, which means that for every $1,000 invested, $2.50 is used to cover the fund's operational costs annually. This is relatively low compared to many other ETFs, making it an attractive option for cost-conscious investors. Over the years, the Avantis US Small Cap Value ETF has delivered solid returns. Over the past 5 years, the ETF has shown impressive performance, with an appreciation of approximately 75.81%. Notably, in the past year alone, the ETF has seen an impressive gain of approximately 17.28%. Such high returns, especially in a single year, indicate a strong performance and suggest that the fund's strategy of targeting small-cap value stocks is currently yielding significant results. The ETF's top holdings are a diverse mix of companies from various sectors, showcasing the fund's strategy to invest in undervalued small-cap firms with growth potential. These top holdings include Abercrombie & Fitch, KB Home, Jackson Financial, Matson Incorporated, etc. By holding a variety of companies across different industries, the Avantis US Small Cap Value ETF aims to minimize risk through diversification, while capturing growth opportunities in the small cap value segment of the market. Number 6. Energy Select Sector SPDR ETF. The Energy Select Sector SPDR ETF, also known by its ticker symbol XLE, is currently priced at $91.83 per share as of July 3, 2024. This ETF, which has been in existence for nearly 20 years, boasts an impressive low expense ratio of just 0.09%. Over its lifetime, the XLE ETF has delivered an average annual return exceeding 8%. Notably, in the past year alone, the ETF has achieved a return over 14%. The XLE ETF focuses on the energy sector, comprising a diverse group of leading companies. Key players in this group include ExxonMobil, Chevron, Schlumberger, EOG Resources and ConocoPhillips. These companies are significant contributors to the ETF's performance and represent some of the largest and most influential firms in the energy industry. Their strong market positions and financial health help drive the overall performance of the XLE ETF, making it a solid choice for investors looking to gain exposure to the energy sector. The ETF structure allows investors to benefit from the growth and stability of established energy companies while also providing diversification within the sector. The combination of a low expense ratio, a long track record of strong returns, and the inclusion of industry-leading companies makes the Energy Select Sector SPDR ETF an attractive investment for those interested in the energy market. Number 7. The Clockwise Core Equity and Innovation ETF. The Clockwise Core Equity and Innovation ETF, also known by its ticker symbol TIME, is currently priced at $27.54 per share as of July 3, 2024. This ETF includes top companies like Nvidia, Amazon, Google, Spotify, AMD, Ecolab and Meta in its portfolio. Additionally, it holds 10% of its assets in T-bills, which adds a layer of safety and provides a guaranteed return, making the fund more secure for investors. Remarkably, it has seen a big increase of over 30% year-to-date in 2024. This strong performance highlights the fund's potential for growth and its ability to deliver substantial returns to its investors. The inclusion of T-bills not only enhances the stability of the ETF, but also ensures that there is a portion of the investment that yields a steady return, balancing the risks associated with equity investments. The selection of high-performing companies such as Nvidia and AMD, which are leaders in the technology sector, along with Spotify, a major player in the digital music streaming industry, and Ecolab, which specializes in water, hygiene and energy technologies, positions TIME as a diverse and dynamic investment option. This diversification helps in mitigating risks and capturing growth from various sectors of the economy. Number 8. Pacer US Cash Cows 100 ETF. The Pacer US Cash Cows ETF, known by its ticker symbol COWZ, is currently priced at $53.92 per share as of July 3, 2024. This ETF, known for its dividend yield of over 2%, is an attractive option for income-seeking investors. The fund's price-to-earnings ratio stands at 11.77, indicating that it's valued relatively low compared to earnings, which can be a sign of good value. The ETF employs a strategy where each holding is capped at less than 2% of the total portfolio, ensuring diversification and reducing the risk associated with any single stock. The portfolio is rebalanced every quarter to maintain this diversification and to adjust for changes in the market. Over the past 5 years, the Pacer US Cash Cows ETF has shown remarkable performance, with an appreciation of approximately 83.28%. This impressive growth rate reflects the fund's successful strategy and the strong performance of its holdings. Year to date, the ETF has increased by approximately 4%, indicating positive momentum in the current year as well. It has a 0.49% fund expense ratio. The ETF's top 10 holdings include notable companies such as 3M, AT&T, Diamondback Energy, etc. These companies are known for their strong cash flows and profitability, aligning with the ETF's focus on cash cows, firms that generate significant free cash flow. The 8 ETFs discussed in this video are some of the top current ETFs trading under $100, which can be the building blocks needed to establish a solid investment portfolio. As always, before investing, take time to research each ETF thoroughly and understand its holdings and investment objective. This way, you can confidently choose the options that best align with your financial goals and risk tolerance. Which ETF are you interested in? Share your thoughts below in the comments section, and don't forget to like and subscribe for more valuable content. Also, feel free to watch the next video on the screen for more valuable insights. Thank you for watching.